This week, the bulls have the advantage from the last few days, but they can also have the opportunity to get trapped. Conversely, the bears have had the advantage for almost 40 days, and they too have the opportunity to get trapped inside their emotions. Hopefully in the next 3 minutes, I can shed some more light on the specific levels that need to happen per index. Here we go. This is a visual to the S&P SPY. Reminder for the bears, this is the objective, which is way up in the 530 to 560 range, and it can all start this week. Everything was working for the bulls last week. There was not one piece of information that they didn't take with a grain of salt and in a good way. This here is also the S&P from the futures perspective. We've been talking about these two X's, and I've been talking about the bearish stint that we're into. It's about 40 days old. It started from May 20th, I believe. March 20th, where we had some sort of a Powell event. Guess what? We're coming up to a Powell event this coming week. We have earnings reports from Apple to come, to name one. I think the more important ones would be SMCI. And if that wasn't enough, we have a jobs report. If that on Friday. If that wasn't enough, we have a whole bunch of, ISM or all kinds of auction reports, all kinds of inflation data, employment data, and the Fed on Wednesday. They meet on Tuesday. They announce the decision on Wednesday. Nobody's expecting a rate cut or anything. It's the language that's going to move the markets or not. The market is set to try for another new high, so be careful shorting. And I'm shorting on really strong days. I will share my trades and my trade updates. Being bearish in the trades tactically is okay. Being bearish in the trade out of reactionary feelings is not. This is the QQQ, the NASDAQ. The indices in general are going up against April 15th, this nasty candle. So getting to it is easy enough. Getting through it will need catalysts, and we said we have a few. So let's see if they can do it. And so I don't get long into these levels, but I am aware of the potential once we bust out of them, how far up we can go. A new high can come instantaneously almost. The next is the IWM. The IWM has been lagging because it doesn't have any large cap in it. So a big move in Apple doesn't help the IWM except in sentiment. So we have an interest in somewhere around 205, 200 and a half, I should say, and through 205. So going to 205, 206, there'll be resistance there. Let's see if they can bust through it one more time. If it goes below 191, below the very bottom of the screen, I believe the bearish scenario should unfold to be another minus 8% in the small caps. Watching how these guys react during earnings week would be probably a more honest tell on what the market is doing this week. Switching over to the DIA, we see that they lost the advantage from that white zone. I'm going to put a marker at 387 to see what the heck that was. Also on the red marker at 390. So we have 387, 390, two important spots for the DIA. Versus, again, the lows from Friday, Thursday, I should say, and the lows from about 7 days before that. So if you lose 376, uh-oh,